Federal Reserve officials holding interest rates steady and only see one rate cut this year, way down from the 3 previously projected. We have that and more coming up on Business Matters. Good afternoon. Thank you very much for being here with me today. I'm your host, Don Ma. Let's just quickly go through markets here. S&P 500 and NASDAQ posted closing highs for a third straight day today. And this is, of course, after consumer prices data came in softer than expected. And after the Federal Reserve's interest rate decision today, stocks rallied in early morning trade on the CPI data. Traders now boosting bets that the Federal Reserve will cut rates by September. We'll have more on that on the report and the Fed in just a bit. S&P 500 gained 45 points, or about 0.8%. NASDAQ rose 266 points, or about 1.5%. And the Dow here falling 35 points, about unchanged here. Okay, let's talk about that new CPI report out today, showing that inflation cooling more than expected in May last month. The federal government reports consumer prices rose 3.3% from a year earlier, and this is slightly lower than in April. Now, on a month-to-month basis, consumer prices stayed the same, 0% inflation. It's the first time actually in nearly 2 years that CPI did not rise on a monthly basis. So contributing to the report, falling gas prices helping to slow inflation. Grocery prices were flat. However, shelter, not so good. Inflation rose 0.4% for shelter for the 4th month in a row. Taking out gasoline and food, however, the core CPI measure rose just 0.2% for the month, and this is the slowest pace since October of last year. So here to talk to us more about how inflation is impacting your wallet, here's Brandon Arnold, Executive Vice President at the National Taxpayers Union. Brandon, again, thank you so much for coming on the show. Okay, so inflation, pretty good from a market perspective. Year over year, down a bit. Month over month, 0% in terms of price increases. To start off, give us your thoughts as to whether this is good news or not.
Yeah, the markets seem to be happy, but I think if you look back just to a year ago, inflation is pretty much flat. It dropped considerably in June of 2023. And it dropped to about 3.2% year over year. And now we're at 3.3% year over year. So we're essentially right where we were in June of last year. For the past year, the trend line is pretty flat here. I understand markets are excited. They want to be excited about things. But overall, I don't think inflation is letting up here. I don't think the report today that came out suggests that we're really in a much better place when it comes to inflation than we were a year ago.
From where you're coming from, are we seeing any relief for the consumer?
Not a lot. You know, there's certain areas, certain sectors where we have seen relief, things like transportation costs, fuel costs, and so forth. But one of the real problems here is housing markets, and there we've gotten no relief. And because that's just so critical to so many American families who are trying to make ends meet and trying to stay afloat in a tough economy, when you see housing costs refuse to budge, that is very, very concerning. Obviously, the cost of buying a home right now is extraordinarily high. The borrowing cost, just the price of housing in general, rental costs, everything suggests to me that this is a long-term problem that does not have an immediate solution. Wage growth needs to increase. And I think that's an area where Congress and the president could actually work together to drive wages up, even if they're not doing a whole lot when it comes to driving prices down.
It's a cycle, right, within the economy. If we raise wages, that's going to have ripple effects as well, some positive, some negative. So, I mean, would that not contribute to inflation?
Yeah, I mean, stronger wages could contribute to inflation, which is why, you don't want to inject a fiscal stimulus into the economy. But you do want people, particularly lower middle income class people, to have more money in their pockets. We're starting to see consumer demand trickle, if not be reduced a little bit. And that could have a positive impact on inflation. But of course, it means people are poor. They don't have a lot of money. They don't have money to go out there and spend. So I think that's why you want to be very careful when it comes to fiscal stimulus. You want to, instead of trying to inject more money into the economy, which can, of course, drive up inflation. What you want to do is increase supply and work out some of the kinks that we've seen in supply chains. Supply chains have improved considerably since the days of the pandemic, but then we've seen disruptions in places like the Suez Canal, the Baltimore Harbor, and elsewhere. And once those supply chain problems start to manifest themselves, and once we start to see a reduction in supply of housing and other goods and services and so forth, that's when prices can start to rise and people don't have that wage growth to offset those higher costs.
So there's an argument floating around here talking about corporate greed is what contributing to inflation. Give us your thought. Is it true or not?
The data says it's not. You know, if you look at San Francisco Fed, they released a report just a couple weeks ago that said profit margins today are essentially unchanged from where profit margins were before the economy, before the pandemic. So corporations are not raising prices. Margins remain where they were. It's really difficult in a very competitive marketplace like we have in the United States to start to raise prices because guess what? Your competitors are going to swoop in with lower prices and steal your business away from you. So it's not corporations that are driving this. It's bad public policy. It's supply chains. It's broad global occurrences that are taking place right now. These are things that I think Congress and the president can do a lot to fix, though there's no silver bullet here. There's no magical way to fix this inflation. We do see inflation high in other countries, but most areas of the world actually have slightly lower inflation than what we're dealing with here in the United States.
All right, Brandon, appreciate your comments today. Thank you very much.
Thanks for having me.
And the other biggest item here today is the Federal Reserve and its decision holding interest rates steady. But in terms of cuts, officials say they expect to lower their benchmark interest rate just once this year. And if you remember, that's down from a previous forecast of 3%. Listen.
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Officials also noted that in recent months there has been a, quote, modest further progress towards its 2% inflation target. But that having been said, according to the statement released today, the Fed committee does not have enough confidence yet that inflation is moving sustainably toward their target. The Fed statement and a new summary of economic projections show a central bank still wrestling very much over how to respond to data. For further discussion on this topic, here's Jim Muriel, Managing Director at TJM Institutional Services. I asked him what he thinks is behind the Fed's rate decision and how does the inflation, as well as other factors, are factoring into the Fed's thinking. Jim, as always, thank you very much for your time today. Great to see you. So Fed officials now projecting previously 3 cuts, but now down to 1, according to the dot plot that we got today. Jim, what happened?
So, by the way, let's mention that the dot plot had 6 cuts at one point in time a year ago. So it's changed quite a bit. It just keeps getting pushed further and further. Now, what's interesting about it is that today's CPI number came out, and the markets seem to interpret it slightly different than the Fed. The Fed, for the last 3 months, it seemed to us in the market that Chairman Powell wants to ease, even though the market data, the economic data, wasn't really supporting that thesis. Okay, well, now all of a sudden it's a little bit of a role reversal today. The numbers came out tamer than expected, the CPI did, including a 0 month-over-month, which was interesting. And now he's still pushing eases back. I think the market expected him to embrace these. And he did say something else in the presser, which I found was fascinating as well. He said there is some indication that the labor market is not as strong as some of the data implies, which is something I've been saying quite a bit. A lot of the jobs we are creating are not quality jobs. They're part-time jobs. They're not career jobs. And I don't think it's a strong labor market. But it's interesting because now, and I don't mean to ramble, I apologize for this, but one last thing is that prior to the number, the belief that there was going to be a rate hike in July a rate ease in July was 12%. Right after the number, that went to 17%. Then he spoke later in the afternoon and it went back down to 9%. He's definitely saying to the market, I'm not easing in July and I'm probably easing in September and it's going to be a one-off.
Okay, on that point, do you think a September cut is likely or more so in December?
No, I still think a September cut is likely. To me, his tell was when he mentioned the labor market. And again, I can't reiterate this point enough. I think the labor market numbers are implying a strong labor market when it is not, in fact, strong. And I believe it's deteriorating as well. And I think he thinks the same thing. And I think that's what he let us know. And I think he will ease in September.
Okay, the Fed has repeatedly said that it is data dependent, and it has said that again today in a statement and in the press conference. But, you know, data lags, right? We all know that. So, I mean, in a sense, is the Fed always going to be behind?
So, yeah, not only does the data lag, and that's a great question, by the way, the data also sometimes lies. Now, one underreported element of the numbers that come out from the federal government is that most all of them are conducted on a survey model where they literally just call people in businesses and gather data. Now, the respondents from those have gone from like 70% prior to 2020 to now in some of the data points like 35% of the people just responding to the data. Now, this isn't CPI. CPI is done at a different sort of calculation, which I have huge problems with as well. But most of the survey data not only is lagging, it is incomplete. The labor data doesn't pick up turns in the market because they do that thing with what's called the birth-death model. So there's an assumption baked into it of businesses being created. Well, businesses aren't being created in a 5% interest rate environment. That's just not happening. I think they are looking at it wrong. The tools they're using to look at it are antiquated at best.
So, Jim, just one more question here. And as you mentioned earlier, Powell has flopped back and forth when signaling whether he's going to cut rates this year. So my question here is there a worry in Powell's mind at all that he does not want to appear to be propping up the economy with a rate cut? Because, you know, we have an election coming up in November.
Okay. It's a great question. It's tough to answer. So the question is the Fed political one way or the other? Does he not want to appear political, or is he? Well, I will tell you this. If that one presidential candidate, Donald Trump said he would fire Jay Powell. Now, granted, Donald Trump just says things off the top of his head. I don't know if it's actual intentions or not. But if one guy said that, I have no problem with someone subconsciously thinking that it would be a better alternative for the other person to win. Is he propping up the economy? No. I think basically Jay Powell's a good guy who wants to do the right thing for the American people. I think there might be back somewhere in the recesses of his brain something gnawing at him that said we have to make things look good for the short term, but I don't think he'll act on those.
All right. Thank you very much for your time today, Jim.
Thank you for having me.
Another big thing worth talking about today, new U.S. sanctions against Russia have suspended trading in dollars and euros on its leading financial marketplace, the Moscow Exchange. So the exchange and the central bank rushed out statements today, by the way, on a public holiday in Russia. It did this within an hour of Washington announcing a new round of sanctions aimed at cutting the flow of money and goods to sustain Russia's war in Ukraine. So the move means banks, companies, and investors will no longer be able to trade either currency via the exchange. Many Russians hold part of their savings in dollars or euros. The central bank reassured people that their deposits were secure. And as well, Apple has become the first brand to cross $1 trillion in brand value. And this is based on a global ranking. Market research company Kantar. Apple has been named the world's most valuable brand for the third straight year. This week, Apple unveiled new AI features expected to rekindle demand for iPhones and reverse a sales decline. Artificial intelligence, meanwhile, as well, launched NVIDIA onto Kantar's list of top 10 most valuable brands in the world, and this is a first for NVIDIA. And next, flavored vape pens are being sold at walking distance from FDA headquarters. Lawmakers grill officials over teen vaping. Here's the story.
One of my friends was so addicted, she would say things like, I'll just die at 20, whatever.
2.1 million teens vaped in 2023, a third of whom were just in middle school. At a Senate hearing Wednesday, lawmakers asked the FDA why it's failing to tackle the problem.
This is a shelf full of potentially dangerous substances in a store in the shadow of the FDA building. I'm just trying to figure out if any of this is illegal or how in the hell it's legal.
Senator Tom Tillis points to flavors such as strawberry, dragon fruit, watermelon, even watermelon bubble gum. The FDA's Director of Tobacco Products, Brian King, never directly answered.
We do have a pre-market paradigm for reviewing applications, and the sheer volume of the volume of those applications and the volume of the market requires us to prioritize our enforcement effort.
The president of the Campaign for Tobacco-Free Kids, Yolanda Richardson, answered in his place.
FDA failed to assert its regulatory authority over e-cigarettes until a substantial e-cigarette market had already formed and e-cigarettes had already become the most popular tobacco product among youth. FDA then further delayed.
E-cigarette popularity exploded in the mid-2000s when they entered the market. The U.S. market was valued at $28 billion in 2023 and is expected to grow at a compound annual rate of 30.6% from 2023 to 2030. Only 23 e-cigarette brands are authorized for sale in the U.S., but over 6,000 brands are on the market.
Over a quarter of youth e-cigarette users use the products every day. One of the primary reasons, as you have heard, children are attracted to e-cigarettes is the sweet fruit, candy, and mint flavors they come in.
Dr. Susan Wally helps people get off nicotine products. She says it's very difficult to get children to quit because of the high nicotine volume in vapes.
The adolescent brain is more susceptible to nicotine addiction, so symptoms of dependence can appear in days to weeks of first experimentation.
She says for most teens, usage is consistent, frequent, and dependent, such is the case with high schooler Josie Shapiro.
The first flavor I tried was blueberry ice, but I tried pretty much every flavor my friends had. I thought I was just enjoying the flavors, but soon my 14-year-old brain craved the nicotine more and more.
Shapiro is still addicted. She says vaping is affecting her mood, her ability to breathe, her skin, and her social life.
I've tried to quit vaping over and over again, but it's really, really hard. Everything in my life is a trigger. Hanging out with friends, driving my car, going to the bathroom, going into the convenience store. All of it makes me want to vape.
The FDA and Department of Justice have pledged further cooperation in battling teen vaping. They're forming a task force with several other agencies, including the Postal Service.
And here's one more thing before we go to break. Amazon contract drivers want more benefits. They're saying that they are minimum wage employees who should have overtime rights. And so yesterday, more than 15,000 of them filed arbitration claims against the company. Amazon Flex drivers are contract workers who deliver same-day packages for Amazon. Right now, the e-commerce giant classifies them as independent contractors who earn between $18 to $25 an hour. But lawyers for the drivers say Amazon only pays the drivers for a predetermined block. So if a driver books a 3-hour block, they only get paid for those 3 hours, even if deliveries take more time, that is. So then why arbitration, right, and not just a flat-out lawsuit? Well, the thing is here, drivers had to sign an agreement with Amazon that forbids them from taking legal action. All right, let's take a break now. Afterwards, Sony Pictures is getting into the movie theater business by acquiring a major dine-in theater chain. And are we seeing the beginnings of a trade war between China and the EU? The European Commission is imposing sky-high tariffs on Chinese electric cars. This after the break. All right, thank you very much for staying with us here. To start the second half, I have some rapid-fire headlines for you that I think is worth your time today. GameStop said it raised roughly $2 billion. This is from an at-the-market equity offering of its shares. And the parent company of Megabus has filed for bankruptcy. Coach USA is seeking to sell its assets and shed debt from a badly timed buyout in 2019. The company operates Megabus and other commuter bus lines in the US and Canada. Ford is also planning to cut up to 1,600 jobs at its assembly plant in Spain. The car maker told the unions 600 of those are permanent, while the remaining can negotiate a bridge. Florida's pension board has voted to support a $56 billion pay package for Tesla CEO Elon Musk. The agency holds nearly 3 million Tesla shares. Shareholders are voting whether to reinstate Musk's pay package that a Delaware judge had voided previously. Now, some China-related stories. Are we seeing the beginnings of a trade war between China and the EU? The European Commission is imposing extra tariffs on electric cars imported from China. So starting in July, additional tariffs of up to 38% will be added on top of an existing EU duty. This decision follows a commission finding that the EV industry in China was benefiting from unfair subsidies. So the move follows the U.S. slapping China with additional tariffs, and the EU and U.S. have both expressed concerns over cheap Chinese imports. Now, the bloc must decide by November whether to adopt the tariffs permanently. An EU spokesman says that Tesla has requested an individual examination, which could lower the tariff on its cars made in China. Other EV makers can also request the same. More financial trouble, it seems like, for China's Evergrande, and this time it's with its new energy vehicle group. Shares for the unit plunged 21%. And this drop came after the company said it's at risk of losing key assets. That includes land and equipment. New Energy Vehicle Group is a subsidiary of developer China Evergrande Group, formerly China's second largest home builder. Now, the company is saying that local administrative officials have demanded that the firm repay more than $260 million in subsidies. This is adding pressure to the already heavily indebted developer. Now, moving on from that, Sony Pictures is getting into the movie theater business. The studio has acquired the dine-in theater chain Alamo Drafthouse. So, for years, Hollywood studios were banned from owning movie theaters, but that changed in 2020. For Sony, the deal is tied into its Experiences initiative. Alamo has 35 locations in North America. It distinguished itself with drinks, dine-in food service, and a cool vibe that became a favorite of cinephiles. Sony also said that the studio's Crunchyroll films are particularly of interest for Drafthouse fans. And I think you're going to be in stitches Thursday. And what do I mean by that? Of course, it's because tomorrow is National Sewing Machine Day. The first patent for a sewing machine was issued to an English inventor in 1790s. The invention has since made life a lot easier for society. You can mark the day by sharing your favorite sewing tips, or you could sew clothing for the needy, blankets, or for shelter animals, stuffed animals for kids as well. But other than that, that's all the stories we have for you today. Thank you very much for watching. If you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or leave a comment online. I do read them, and as I always say, business matters. We'll see you tomorrow.